Yeah, thank God for the internet, man. You can, you get any kind of pictures you want. Guys, with that, the tip of the week is we're going to be talking about the Mutual of Omaha Term Life Express. In the, since I can tell you this, since 2009, I have written hundreds, if not thousands, of these applications. It's a great product. It's a wonderful product, and they've have improved upon it and made it even better over the years. Jimmy, I know you've written quite a bit of this product as well. So during this training, guys, if you do have any questions, please let us know. You got two experts on this product, myself and Jimmy Hernandez as well. So with that, let's go ahead and get started on the training portion of our call. Now, with the Term Life Express, and if you're a new agent, or if you're not familiar with this, one of the easiest way to quote products from Mutual of Omaha is to download the mobile quoting tool. They have an app. Just go, if you have an Android or an Apple phone, go to the Google Play Store, the Apple Store, and just download it. It's a free download. You can actually customize it you can put in orders so you can have it where every time it opens up, it defaults to the state that you want, and then you can move around the products. So I have mine. So when I open it up, the first product, it's got the Living Promise, and it's got the Children's Whole Life, it's got the Term Life Express, and then the Guaranteed Advantage product on there. Those are the first products, and then I have the rest of them. But this is everything here that you can quote off of this mobile tool. You can quote the cancer and heart attack coverage, Children's Whole Life, Guaranteed Advantage, which is the guaranteed issue accidental policy, Guaranteed Universal Life Express, the Living Promise, which is the final expense. This is the number one seller for Mutual of Omaha. You can also quote the long-term care insurance, Medicare supplement, the priority income protection, Term Life Answers, and Term Life Express. And then the last one, Term Life Express, that's what we're going to be covering today. It's an easy download. It's very, very easy to use. And then with that, we're just going to cover some of this is a highlight sheet that we're going to cover with you. For the non-return of premium, issue ages, you can go down to age 18 all the way to age 65. 65 is the maximum issue age for this product. And at 65, the maximum term, the 15-15 would be what that's indicating. It's a 15-year guaranteed level term, which would cover them till age 80. And then it would be guaranteed renewable until age 100. Okay, I'll explain that in a minute. Ages 18 to 60, you can do a 20-year term. If they're under 50, you can do a 30-year term, which is great. Which, age 50, that'll cover them until age 80. With return of premium, you have to be under the age of 50 to get the return of premium. And if you're 50 or less, you can do a 20-year. I don't know. I'd have to double check this. It says here, age 50, you can do a 30-year return of premium. Does that sound right, Jimmy?
Yeah, it does vary by state, Joe, but that is correct.
Okay, all right. That may vary by state. That seems kind of long to do a return of premium. Here's what I can tell you about return of premium. If I can give you one tip, it works better if you do it on the 20-year platform versus 30. 30-year, the return of premium, the payments are actually cheaper, but they get less money back, and the conversion ratio, if they want to convert it to permanent coverage, it doesn't convert as well into the permanent coverage. So whenever I do return of premium, I always try to do the 20-year. That way it's paid off it's paid up in 20 years. It seems to work out best. Underwriting classes, guys, this is simplified issue. So this is either they qualify or they don't. There's no level, there's no graded. And it's either standard non-tobacco or standard tobacco. And then premiums you can set up is doing monthly, quarterly, semi-annually, or annually. Guys, these are the riders that are available on the product. Now I'm going to show you which ones are free. In fact, what I'll do is let me go down here and draw a line. Accidental death right here. There you go. This top section right here, these are all free riders that come with the policy, and it could vary from state to state as far as what they include. But the first one is the living benefit. This is a great policy that comes with living benefits. It's got terminal illness, chronic illness, and critical illness included. Also has an accelerated death benefit rider for terminal illness. It has a residential damage waiver of premium. That's if they own a house and they get sustained so much damage on their house, they can waive their premiums up to 6 months. There's also a waiver of premium for unemployment. Now, this is not a product. Keep in mind, this is not a substitute for final expense. Okay, this is for typically for your healthy younger people that are working, and this waiver of premium means if they have a regular job, W-2, they're an employee, and they get laid off, there's a waiver of premium that will waive their premium up to I believe it's 6 months, and there's no charge for that. Okay. There's also a common carrier for death benefit provision at no extra cost. Common carrier is anything they would have purchased a ticket for. So if they bought a Greyhound bus ticket or airplane ticket or anything where they actually purchased a ticket and they passed away while being a passenger, then there's it will double the coverage. Actually, do the line too soon. Accidental death benefit. All right, so I made a mistake here. I'm sorry. This is where the line should have been. These are, let me correct that. Use the eraser. There you go. So the next benefits are ones that are paid riders. The accidental death benefit, which will double the benefit. If you include that, it's pretty cheap rider to include. There's a dependent child rider that's available. There also is a disability income rider that's available. There are certain restrictions on that disability income, so you do have to take a look at the list. People that have a like a high risk job, high rate of accidents, so you'd have to take a look at the list. But I'm pretty sure like a policeman or a firefighter probably not eligible. You'd have to take a look, but it is available. Disability waiver of premium. So if they do have to go on disability, this will waive their premium. That's a fantastic rider. Included in the policy. Okay, and then some of these riders too, you have to be careful because if you're doing an ROP policy, as an example, some of the benefits like the disability rider not available if you're doing ROP. So the cool thing is that if you're using the quote tool on your phone, it won't let you make a mistake. So, and what you'll notice if you plug in there, if you're pitching the ROP product, then the waivers that are not eligible, they won't be highlighted where you can click them to quote it. That way it'll keep you from making a mistake. Also convertible. What does conversion mean? Conversion means that these policies are convertible up until the client's 70th birthday. So they could start out with a Term Life Express, and then they could convert that into a permanent life insurance policy. Okay, now, if that's the situation, if that's the scenario that you're proposing, in this situation, this is where you would not want to quote return a premium, because a return of premium policy is not convertible into a permanent policy. I just want to, like, I don't want you to guys get confused on this. There's two ways you can angle this. So if you do a policy with return of premium, I'm going to show you here in a minute where you can take the cash that's built up and you can convert that into a paid up policy where the client doesn't have to make any more payments on it. If they go into a regular Term Life Express without the return of premium, then they convert that into a whole life policy where they would have to continue to make premiums, but it would be a permanent policy. Another feature of this policy is that it's renewable until age 100. Okay, so, and this again would be for non-ROP policies. As an example, let's say you have someone who's 50 years old and they want $50,000 of term policy, not utilizing the return of premium, which means is that if you can get them a 30, if your state will allow it, you take someone who's 50, they can have locked in premiums until they're 80 years old. At age 80, when their term policy is expiring, with this annual renewable term, they can renew the policy. It's guaranteed renewable without proof of insurability to age 100. Okay. Now the catch is obviously the premiums are going to increase every year from age 81 to age 100. The premiums will increase over the time. But the cool thing is it is guaranteed insurability. The great thing about that, as an example, let's say you got a client that locks in for a 30-year term. They make it to age 80, but let's say they've come down with an illness in their late 70s, and things aren't looking too good. Like their life expectancy is not going to be more than 2 or 3 years because of an illness. The great thing about that guaranteed insurability rider renewability until age 100 is they, even though the premiums may be expensive, it'd be worth it to continue to pay on it to be able to have that guaranteed payout. All right. So Jimmy, I'm going to go to the next slide. I just want to see if there's anything else you want to add as far as
Yeah, I want to expand on a couple of things, Joe.
perfect. Okay.
So the first thing I want to say is like most of the time we're working with people 50 and older. And if you have a client that wants a higher face amount, okay, this is definitely a good product to do it. You can go up to from ages 51 to 65, you can go up to $250,000 without a medical exam. So that's amazing. How about, Joe touched on it, but I just want to expand on it a little bit, is the waiver of premium for unemployment. So if these people are working, you can tell them, look, if you ever get unemployed, then you don't have to worry about it, because basically you go to the unemployment office, get your proof that you're on unemployment, and you don't have to worry about making those premiums till you start working again. I mean, that's huge.
Yeah, and that's free. There's no cost for that.
There's no charge for that. And then you have the living benefits. I mean, I love that. So like, this is life insurance that you can benefit from while you're still alive. And what does that mean? And all you have to do is go to the accelerated death benefit disclosure in the application, and you can read it to them. And to me, this is like a selling point. I always do this before I even start with the app. So like, when I make the recommendation, I go to the accelerated death benefit. I say, look, I want you to check out your living benefits. If these things happen to you while you're still alive, these are your benefits. And so like, if they're ever like they need assistance with two or more of the activities of daily living. So in other words, they have some kind of provider to help them with activities of daily living. They can accelerate up to 94% of their face amount. Or if they get a chronic or critical illness, critical illness would be like if they're diagnosed with cancer or ALS, or, there's a couple other sicknesses in there, but you just got to read them to them. And if they ever get that, they're able to accelerate a large portion of it. Same thing with the chronic illness is going to be like if they had a stroke or like a heart attack, stuff like that. So just read those benefits. This is no extra cost. This is included in there. And then the common carrier is a bonus. So I'll talk about that in a second. But I just want to elaborate on that. Like, you got to really, make it sizzle to them, show them their benefits, paint a picture for them that, this is not just for your family when you pass away. If one of these things happen to you while you're still alive, this policy will actually help you financially. So anyway.
Awesome. And I think I may have another slide or two that talks about that. Let's see, underwriting requirements. Okay, now one thing I just want to mention here, Jimmy, just so agents are clear, guys, this is not a substitute for final expense. Okay, underwriting criteria is totally different. Okay, so this is for your healthier clients. Okay, and when we go through the application, Jimmy and I will kind of go over that. This is not for the client that had a heart attack 5 years ago, but they're really healthy now. No, this is for people that have never had any health issues other than just minor stuff like high blood pressure, cholesterol, things like that. But okay, Express issue. And by the way, too, the Term Life Express and the GUL Express, it's the exact same underwriting criteria. Okay, and in fact, you actually use the same application. But for the Term Life Express, if they're between the ages of 18 and 50, you can now go up to $300,000 of coverage. If they're 51 or over, you can go up to $250,000 of coverage without a physical exam. Now, here's one thing I want to tell you, and we'll get into it in a minute. If they're a certain age, I believe over 60, there is a mandatory phone interview. Okay. Well, let's stick on this first side. On the left side, if they're between the ages 18 and 50, it's simplified underwriting. There is a bill chart, so be cognizant of that. If you have someone that's like, if you're looking at them, as an example, let's say you got a client, a male who's 5'9" and 250 pounds, as an example, which is not crazy heavy, but you may want to look at the bill chart because they may be really close to being over what the bill may be. Okay, so just be aware of that. They're also going to do an MIB, which is the Medical Information Bureau. They're going to do a pharma check the prescriptions. If they're under the age of, if they're 35 or less, there is a mandatory motor vehicle check. So if your client is a bad driver, they have reckless driving convictions, DUIs, they're not going to qualify for this product. If they're over the age of 35, you still have to be able to answer no to those questions, but they're not going to do a typically they're not going to do a motor vehicle check unless for some reason there's like a red flag or something, and it could be possibly random. There's also going to be random phone interviews, so make sure you're answering the questions properly. And there is a mandatory phone interview for applications of 250,000 plus. So keep that in mind. Now the over 50 crowd, again, yeah, you want to add something, Jimmy?
No.
Okay. Over 50, 51 to 65, again, simplified issue. Look at the bill chart. They're going to do an MIB, prescription check, motor vehicle check as needed. Very rarely have they ever do one. They are going to do random phone interviews, and there is a mandatory phone interview if they're over the age of 61. So just be aware of that. And let's see, it just talks about it may vary. I'm just reading through here. Random phone interviews will be conducted for quality control, medical questionnaire, an occasional APS. Very rarely will you ever get, an APS. Normally, the applications, guys, I've written have gone through very quickly, very smoothly. Just do a really good job of field underwriting. And like I said, this is, again, I'm going to reiterate it. This is for your healthier clients, not for the people that have had health issues. Jimmy, anything else you want to add or expand upon before I move on?
No, sir.
All right, awesome. Guys, this is just a highlight of some of the things we've already mentioned. I'll just go over this again real quick. Remember, the policy comes with the accelerated death benefit. Also has the living benefit riders for non-ROP policies. You've got the terminal illness, and this gives you the definition. All this stuff is available, and like Jimmy said, it's actually on the actual application itself. You can just read it. Terminal illness rider, critical illness rider, residential rider, waiver of premium. This is one that's really cool that Jimmy was talking about. Waiver of premium for unemployment, common carrier death benefit, and then these are the paid riders down here. You got disability income, disability waiver of premium, accidental death, and then of course the dependent child rider as well. So again, we're just kind of reiterating the different riders that are available. Term conversion guidelines. Remember I talked about these policies are convertible. Let's see, for right now, let's forget about this one because we're not talking about Term Life Express. We're only dealing with Term Life, Term Life Answers. We're dealing with Term Life Express. The policy is convertible after 2 years. So the policy has to be enforced for at least 2 years. The client needs the policy anniversary date following the insured 70th birthday. The bottom line is make sure that they get if they're going to convert it before they turn 70. Okay. Now, what you can do if you've been writing this business a lot and you have a book of business, you can actually go out and convert these policies and actually get paid a commission on it. Okay, the commission structure, you get paid 50% of your commission structure if you convert policies that are in anywhere between the 3rd and 5th year. Okay, so you get a reduced commission. If the policy's been on the books over 5 years, they're going into the 6th year, it's 100% commissionable. Okay, so what's nice about this, if you've been doing this for a while and you have a book of business of Term Life Express, it's a great time to do the annual reviews and you go out and you can actually convert this either to a living promise, or if they're under the age of 65, you can convert it to a guaranteed universal life express policy, which is an awesome policy, and you'll get paid another full commission on it as well. And then guys, here are just the conversion rules. I'll let you read that stuff on your own. Term Life Answers. Okay, again, we're not dealing with this product. We're only dealing with this product. These are the products that it's convertible to. You can either convert it to a GUL Express. The minimum face amount for that product is $25,000. Or if they want a smaller policy, you can convert it to the Living Promise, the whole life, which the minimum face amount would be $5,000 on that policy. Jimmy, anything you want to add about the conversion about converting a policy?
No.
Okay, we'll move on. I'm just hoping people are agents are understanding the difference between converting it and then the agents or the client that takes the ROP and turns that into a paid up policy. Guys, these are just some of the living benefits that are available, which we have already touched on. There's a great flyer that's available as well. Let's see, term life policies. This is on the non-return of premium policies. Term Life Express, 10-year term, 20-year term, 15-year term, 30-year term. Let's see, these riders give clients an option to access a portion of their death benefit early. Benefits can be used however they wish, providing comfort at a difficult time. The 3 triggers for the living benefits are you have a terminal illness, a chronic illness, or a critical illness. For each of these accelerated death benefit riders, the request benefit amount may not exceed 80% of the policy's face amount as of the policy issue date. Let's see, definitions of chronic or critical illness may vary by state to state. So the benefits are there. You just need to look at the actual state application, and it'll give you a clear definition of what the benefits will be for that particular state. But again, it's just an amazing product that's got great living benefits. And like I said, one of the biggest selling features is that there's no physical exam that you have to do. Now, what Jimmy and I are going to do is we're going to kind of go over a scenario here, if you will, an example and Jimmy's going to expand on this, is like, who are the clients? Like, who should we be pitching Term Life Express to? Okay. Well, in this example, this is a Term Life Express with return to premium scenario. And that's one of my favorite features, is the return to premium. Here I've got a client. Her name is Mary. She's age 30. She's going to do a Term Life Express, a 20-year with the return to premium, and she's going to do a face amount of $100,000. Now remember, guys, I really like the 20-year return of premium feature more than the 30-year. Two reasons why. Number one, it's a higher premium. Higher premium means is that they're going to get more money back, and because they're going to get the money back at an earlier age, when you decide to flip that into a paid up policy, you get a bigger face amount. Okay, so here we go. The plan premiums for Mary, plan premiums are $64.12 for 20 years, which means at the end of 20 years, she's got two options. This is what I really like about this. She can either get back $15,000 in cash, which is going to be 100% tax-free, because it's basically just a return of premiums. It's money. There's no taxes on it, because they're just refunding her money. It's like a refund. Hey, you bought this insurance, you didn't use it, here's your money back. Okay, it's like a money back guarantee. $15,388 for Mary to do whatever she wants to do with it. Okay? Or she can opt the second choice. She tells Mutual, you know what? You keep the $15,000. Mutual will give her $52,997 of paid up insurance, which she never has to make a premium ever on. And I don't have a list here, but that insurance is paid up until age 100. Now, if you were to do Mary for let's say instead of 20-year, I don't have the calculation in front of me. A 30-year term, as an example, the premiums would be lower, and because she'd be 10 years older and her life expectancy would be lower, I'm guessing that 52,000 would probably be dropped down to like 30,000 or something like that. So that's why if you're going to do ROP, my big advice is do try sticking to the 20-year term, not the 30-year term. So Jimmy, before I move on to the next slide, is there anything you want to expand on this? Or I think this would be a good time to talk about who are the clients we're looking for that would be a good candidate for Term Life Express.
Well, in this case here, obviously, somebody under the age of 50 or 50 and younger, so under 51, down to age 18. So 18 to age 50, you're able to do the return of premium. And this is a really, really good opportunity to, like, how can I say, have an exclusive product. And what I mean by that is, let's say you have somebody that they've checked into prices. They looked at, some competitors, and they either were quoted a regular term, right? Or they were quoted a whole life, right? But in this scenario, the way I present it is, I don't even talk about the cashback. I tell them, look, you pay this premium for 20 years, and then you get a reduced paid in full policy. So in 20 years, you'll be 50, and then you don't have to make any more payments, and you'll have a policy that's paid up for $52,997. And that's the way I pitch it, okay? And then I show them, this is how much you'll have paid into it, the 15,388. That's what it adds up to, the 6412. And so, I mean, you can't go wrong with that. It's something that not a lot of people are doing out there. And so you making an exclusive product, and it just makes it easier to close, because now you're not comparing, the same product with a different carrier. You're showing them something they've never seen before, and they like it. They love it. So.
Just real quick too, I just ran the rate. The same scenario, guys. If you take Mary, who's age 30, and if you were to do that on a 30-year product, return of premium, the premiums are only $20 less. It's $44, but she's got to pay on it an extra 10 years. Um, and then so the return of premium at the end of 30 years, she'd only get back 15,900. So it's a little bit more in cash back, but the paid up insurance is reduced to 43,000. It's 9,000 less in paid up insurance. So you can see the total benefit here is to definitely to do the 20-year. All right. So with that, we're going to move on. Hopefully you guys understand that. If you need some help, if you need us to um, explain this a little bit more in detail, give us a call and we'll explain it to you.
Hey Joe, can I tell you like a little trick I do on that too?
Yeah, absolutely.
Okay, so I'm gonna go to Guaranteed Universal Life Express. I'm gonna do the same person, and I'm gonna go to Guaranteed Period 120. Okay, and I'm gonna calculate the premium. So if you wrote the same girl up on a GULE, same application, same underwriting guidelines, and did it like a whole life where you guaranteed it to age 120, her premium would be $60.10 a month.
For how much
So not only
coverage?
for 100,000.
Okay.
So not only are you like a little bit cheaper, because what was her premium? 58 or what was it?
No, I think it was 64.
Oh, go back to that last slide. Okay, 64. So they pay $4 more on the Term Life Express, but she only pays to 50. And when you tell somebody young, like at age 30, I wrote three of these 2 weeks ago, right? So like, and they're all in their 20s. I said, look, what would you rather have? Something that you have to pay your whole life and keep that $100,000 coverage? Or would you rather pay a few bucks more, pay for 20 years, and then be done with it, and then just have a paid in full policy for a little bit lower? All three of them chose the ROP. So I mean that's the way to sell it in comparison to a different product.
Right. And I mean, obviously the awesome selling point is that who wants to be making insurance premium payments, when they're 80 years old? You know what I mean? I
Mhm.
mean, so that's the benefit is that when, obviously when they retire, they're on Social Security, they're going to be at a reduced income. So it's going to help them already have their insurance paid up in full. It's
And
kind of a no-brainer, man.
and as a bonus to the agent, you get the same rate of commission on Term Life Express as you do with Living Promise. If you do sell the Guaranteed Universal Life Express, your commission is going to be at 20% lower. So I mean, makes sense to
Uh,
sell Term Life Express.
Good point. Yeah, I forgot about that. That's an excellent point. Same comp rate, transferable comp rate. So that's an awesome fact. So guys, we're going to go over the application. This happens to be an Illinois application. Um, so as a reminder, these are state-specific applications. So make sure you're using the application for your state. This is the two products. This application is for Term Life Express or the Universal Life Express. Okay. And that was just the cover sheet. So guys, this is the application. It's real straightforward. I'm only going to cover a few things, but this is all, basic. Just make sure you're filling in all the spaces here. Make sure you do get in the driver's license number. One thing that's different about this, they are going to ask about occupation in their employer. Now, if you have someone that's on disability, it's a little bit tougher to get them approved if they're on disability because of like knee issues or something like that. Then you can probably get it to pass through. But just remember, this is not because there is a question on the application if you're receiving disability income. So traditionally, if you got somebody who's on disability, we're normally putting them on a Living Promise app, not a Term Life Express. That may be a more suitable product. Over here is where you're selecting your term. What term are you doing? 10-year through 30. Remember, return to premium is only available on the 20 or the 30 year. This is where you're going to fill in the amount. So as an example, if we're doing 100,000, we're going to write that in there. And then if they're doing a return to premium, you got to make sure you mark the X. And again, only available on 20 or 30 years. If they're doing any of the riders, make sure you select the riders. If they're doing the disability income, make sure you're marking on there which one it's available for either 18 months or 30, and make sure you mark down what the amount is. If you're doing permanent insurance, you're going to skip the first part, and if you're doing the Guaranteed Universal Life Express, this is where you do the bottom part. Okay, pretty straightforward. Just make sure this part has to be done on every application.
Hey, Joe, can I interject something here?
Yes.
So, if you're selling this product in the field, okay, your phone app that you use to do the quotes is just going to give you the basic quote. It's not going to include the riders. So if you want to do the riders, because what's different with this product is you can add a children's rider to it. You can add the accidental death benefit rider. But what you need to do is you need to use the WinFlex software. Now, what I do is I use my tablet and I use what they call WinFlex Web. Okay, so it's a web-based software. It's not downloaded to the tablet. You do need an internet connection, just like you do to use your app on the phone. But anyway, go to winflexweb.com. And then you got to request it, and then they'll send it to Mutual of Omaha. They'll have to authorize you to use it, but it only takes like a day. Once you get that authorization, you can log in and to WinFlex Web, and then you just do a quick quote, and you can add these riders, and then that way in the field you'll know how much more it's going to cost to add the accidental death benefit, how much more it's going to cost to add the children's rider, and you can include those riders on the app and do a little upselling right there, while you're in front of the client.
Awesome. Great point. Also at the bottom, make sure you're filling out what payment mode are they using. Typically, it's going to be a monthly draft. What is the modal amount? How much is the premium? So in this case, for our girl Mary, it was 64 and some change. Amount collected, I didn't collect anything. I'm going to put NA or 0 in there. And then owner, you only complete that if the owner is different than the insured. Typically, they're the same. All standard stuff here. Who's the beneficiary? List any coverage that they've had down below. Guys, this is all standard stuff here. Let's skip over most of this. Now you're going to get into health questions. Remember, this is a knockout application. It's not tiered. It's not like Living Promise where you have either graded or level or graded. This is either you qualify or you don't. So you just got to read and what's different about this product is if you notice up here, the first question is about AIDS or HIV. So obviously if they have that, it's no, you got to go guaranteed issue. And then if you notice question 2, there's like A through G on here. But the question is asked, it's not within the last 2 years or 5 years, is have you ever? So sometimes you get a client that looks like they're like super healthy, they're like in their 50s, but they had a heart attack when they're like 35. That's like 15 years ago, like no big deal, right? But they're not going to qualify for this product because it's ever, have they ever been diagnosed? Okay, so just be aware of that. On these questions. So just I'll read some of them. Just like if they have chronic lung disease, they're not going to qualify. If they suffer from bipolar depression, normally like on a final expense, depression and anxiety pills, those types of things are overlooked. On this application, they're not. If they've had kidney disease, cancer, any time in their life, even if you have a client that had cancer like when they were a kid, like at 18, they're not going to qualify for this product. The next set of questions, has the proposed insured currently or within the past, these are 12 months. So help with eating, bathing, dressing, that sort of thing. Received by a member of medical professional for the following types. They had to go to a nursing home. Uh, so you just gotta you gotta read through these. If they're using any of the following, if they used a walker, wheelchair, electric scooter, oxygen, or a catheter, they're not going to be eligible. In the past 12 months, been advised by a member of the medical profession to have a surgery, operation, diagnostic testing for other than routine screening. So a lot more health questions. Consulted for a physician for chronic cough, unexplained weight loss, more than 10 pounds, gastrointestinal bleeding. If they're going to do any extreme sports, they're not going to qualify, like hang gliding, base jumping, rock climbing. And then within the past 10 years, if they've been treated for, so 10 years, they're going back for alcohol treatment. So if you had a client that had to go to AA 7 years ago, they're not going to qualify for this product. If they've been convicted of possession, unlawful drugs, use prescription drugs other than prescribed, they're not going to qualify. If they have ever been convicted or if they're awaiting a felony, they're not going to qualify. If they've been hospitalized for high blood pressure or mental nervous disorder, not going to qualify. And then in the past 5 years, has proposed been convicted of driving under the influence of drugs or alcohol, been convicted of reckless driving, or been convicted of 4 or more moving violations within the last 5 years. And then Jimmy, somewhere on here, I think it does ask about if they're on disability, right?
Yes, that's the next page.
That's the next section of questions. Okay. So the one thing about this with the diabetes, because it does ask about diabetes, but it does indicate over the age of 50. So if you have a client that is in their 50s and you think they really want a term product and they're a good candidate for this, if they're diabetic, um, but their diabetes is well controlled without any complications, then uh, you can answer no to this question because it is specifically asking about diabetes before the age of 50. And then diabetes with any complications like neuropathy, or of course, if they've had diabetic coma or insulin shock, they're not going to qualify. Anything else before I move on about the diabetes?
No.
No, but I think that's pretty huge though, considering those are similar guidelines to like the Living Promise on diabetes. Okay, and then 12. This is where I've seen a few agents get stumped on because they have a client who seems to be in really good health, but they're on disability. Let's see, in the past 12 months, has the proposed insured applied or received disability, hospital, or medical benefits from an insurance company, government, employer, or other source other than maternity, fractures, spinal or back disorder, hip or knee replacement. So if you have a client that had to take disability, maybe because they have a bad knee or they have a bad back, potentially they are going to be qualified for this product, even though they are on disability. You'll need to write up an explanation of their why they're on disability, how long they've been on disability, and I think I mentioned why they're on disability. And then in the past 5 years, has the proposed insured consulted with a doctor or been hospitalized or treated by a healthcare professional for any other health condition than routine physical checkups, eye, employment, or FFA examinations? So you need to be able to answer that. And then if you answered yes to anything, here is where you would need to fill in the explanation.
Hey,
So
Joe,
Jimmy, as far as health, anything you want to cover before we move on?
I do want to say something because I've seen agents make this mistake is that, they didn't really read the questions, uh, in detail when they were asking through it. They kind of rushed through it, kind of assuming that they were the same questions as Living Promise.
Right.
And then it turns out that one of those questions was a yes answer, and the application is now declined. And you cannot, at that point, offer Living Promise. Once they've been declined on this product, you just shot yourself in the foot. You're going to have to change carriers, or you're going to have to apply for a fully underwritten product where they're going to have to do a medical exam and all that stuff.
Good point.
So make sure that you read the questions to your client, and don't just assume that it's a no answer, because you don't want to shoot yourself in the foot. You want to know right up front, is this going to be a good deal or not, and pick the right product while you're there the first time.
Absolutely. With that, guys, make sure you put where are you taking the application, and make sure you get it signed here down at the bottom. Everything else from here is pretty standard, man. This is just the producer statement. Make sure you answer all the questions and you sign this. No biggie. The payment authorization form, I believe this is the exact same one as that's on Living Promise, so if you're used to that. Here at the top, you just put in the amount that you're going to quote. So in our example, it's 64 bucks. Let's say I want to future date it. Let's say the client wants payments to come out on September 28th. You mark this part. You put in 9/28. Excuse my bad handwriting. And then when do they want the recurring date to be? Well, in this case, they want it to be on the 28th. And if they want it on a specified Wednesday, they can do that as well. And then, of course, this is the normal stuff. Payment information, name on the payer's name as it appears on the bank account, put in the checking or savings information, and make sure that they sign it. And I think the rest of these are just standard forms. Producer report, answer this. Answer the questions on the producer report. One thing that's different about this, that's different than like the Living Promise, they do ask about a mortgage. It's not required for them to have a mortgage, but when this product first came out, this is like a mortgage protection product. So when this product originally came out, one of the qualifiers was that you had to have a mortgage in order to qualify for this product. Now you don't. But they still want to know the answers on here. I guess kind of like a survey. So has proposed, insured, purchased a home, or refinanced a home within the last 2 years. If they haven't, no reason to lie. Just mark no. Maybe they're renters. But if it's a yes, put in here the approximate mortgage amount and who they make payments to. Okay. And then accelerated death benefit. This is the part that Jimmy was talking about, where you can actually read this to your clients and explain to them what the benefits are on the accelerated death benefit. And it's actually a two-part form. In most states, I believe it's a two-part form. Make sure you get your clients to sign this form. Of course, everything has to be signed. You have to sign it as well. Conditional receipt. This is the same as the Living Promise. Put in the date up here when you're doing it. You're going to have your clients sign right here. Make sure they date it. Typically, we're not collecting payments. We're going to check this box. It's the electronic transaction authorization. Put in the amount. It was $64 and some change. And then producer signature. Guys, this is where you sign it. And then lastly, this is the life application submission form. This is the basically the cover sheet. You need to submit this with every single application. Comments, if there's any special comments you need to put in there. Otherwise, you're just filling in your client's the name, agent name, your information goes here. Your next highest upline, it's not necessarily a requirement. If you have it, you can fill it in there, or you can just write in there Senior Solutions or your insurance group. Either one of those will work. And how do you submit an application? So, Jimmy, there's basically two ways you can submit an app here. You can do the electronic version. You can take your computer. Or you can use an iPad or a tablet to do an application. You can do it electronically, which is very easy, or which I think most of us are doing. We're doing paper applications. So in that situation, if you're doing a paper application, as far as I know, there's only one way to submit it. You have to fax it. Mutual does not have as far as I know, they don't have an email address for you to upload it and email it. And this is the application number to submit applications to if you are doing a paper app. It's the same phone number as Term Life Express or Living Promise or any other applications for Mutual of Omaha. How about it, Jimmy? Anything else do we need to add? This has
I
been a
want to
long
add,
training session.
I want to add one last tip, and I'll let you guys go. And that is, with this product, I like to use a catchphrase. I call it triple protection. Okay, write that down. And what I do is I quote Term Life Express or Guaranteed Universal Life Express with the accidental death benefit rider, and then it comes included the common carrier uh, death benefit rider, right? So then I tell them they're triple protected. So in that scenario where the lady was covered for 100,000, if you elected the accidental death benefit rider, then if she died by accident, it pays 200,000. And if she died on an airline or a train or something like that, then it's going to pay 300,000. So they're
Mhm.
triple protected. People love that. So
Yeah,
anyway, that's one last little tip for you guys.
that's awesome. Well, guys, thanks for participating. Have a great Labor Day weekend. If you need anything, if you need us to answer any other questions on this product, let us know. It's a fantastic product, good selling. Hopefully, this video was helpful for you guys, and we'll talk to you soon. All right, Jimmy, take care, buddy.
Bye bye.
All right, bye, everybody.